Good evening and welcome to Critical Thoughts. I'm your host, Braxton Smith, and joining me this afternoon is Jake Bird. Today we will be talking about the recently very controversial tax bill that the GOP's been trying to get through. It passed the House, passed the Senate, and now they're going to rework it a bit. It's HR1. Huge tax cuts involved with that. We're actually kind of torn between, are we going to talk about net neutrality or are we going to talk about taxes first? And we decided the taxes is much more important. We're going to see much more profound changes in our economy. So we're going to start with that. And as you can see, I kind of worked on the production value here a bit. It's like I was telling Jake earlier, the only thing growing faster than Bitcoin right now is our production value here at Critical Thoughts. So I hope y'all enjoy it. Jake, did you want to go ahead and lead into this video?
Well, as you said, this is about the tax cuts, and we've heard a number of different complaints about it. We're going to try to address a few of them, I guess. And, we'll just state it right now. This is as of the version of December 8th. So, if something changes later on, like you said, because they're trying to work on it, there's no aha with this. All right, we're time stamping it right here, December 8th.
All right.
And also, we're probably not going to cover every question because it's an over 500-page text plan. We're not going to be able to cover everything.
Wait, you didn't read the whole thing?
Surprisingly not. I know.
Well, we do have the Cliff Notes, and we actually do even have some commentary from Jake's boy, Bernie Sanders. Senator Sanders went over it with a fine-tooth comb, him and his legal team, and found some of the worst aspects of it. But there's three major components to this I wanted to talk about that was just huge for me anyways. And that was the corporate tax cut was the biggest one. I'm just going to go ahead and let the cat out the bag on that one. There's a corporate tax cut. There's not quite as profound a tax cut for the middle and upper class Americans and the Obamacare mandate repeal. And I'll let you go ahead and start into either one of those. I'll let you pick, Jake, since Jake's got all the tabs here. No more papers. Y'all remember me holding up the papers. Like I said, production value, we're going up, baby. Go ahead, Jake.
All right. Well, I guess we'll start off with your favorite, the corporate taxes. Hold on. Just one moment. All right. So, this is just some OECD countries. So, yeah, there's probably, I think, 2 or 3 countries that worldwide are ahead of the United States that aren't shown here. But there you go, that 35%, that's the current one. Now, this is what Trump originally planned right here, this 15%, but, we're talking about Congress here. They're going to be reasonable. They're going to work with it. They're not going to go completely Ancapistan on this. They're going to find that middle ground of 20%. That's what the HR1 is currently talking about. So we'll be with such radical fair countries as Iceland, Finland, and Estonia, and just 1 point above that radical libertarian country, the United Kingdom.
Yeah, and so something just to help people understand a little bit more what that's all about too. So corporate taxes is it's actually a tax levied against any business making a profit. And what it's important to understand is that if you are living within the United States, chances are you're utilizing the service or purchasing goods from a company of some sort, be it small business or a corporation. Either one, both of them are paying into these corporate taxes. And you as a consumer, when you go to buy something, you're not only paying the evil fat cat CEOs 1 penny per transaction, you're paying for all the people that work at this factory. You're paying for the materials, you're paying for the transportation to get the materials there, to ship the final product out, and you're also paying to cover regulations and taxes on the company. So, a lot of people seem to have this misconception that you can just tax these companies all the way to infinity. But what they don't realize is that those taxes have to be paid somehow. And the way companies survive is by the money they make from you, the consumer. So by cutting these taxes, they're actually cutting the taxes you as a consumer have to pay. They just kind of hide it in there, and that's why it doesn't often occur to a lot of people. They hide it in there almost as cleverly as the Federal Reserve hides taxes through quantitative easing. So you as a consumer, after this passes, if it does, which I'm like super excited about it, you're going to see the economy probably rebound unless there's some unforeseen correction, market correction. Well, I say unforeseen. It's coming. I just don't know when. But you as a consumer will have more buying power is the bottom line of this after this. So you got anything else you want to throw in on that, Jake?
Yeah, just as a general aside, I know two of the main arguments with the corporate tax rate is, well, they make so much profit as it is, and as you were saying earlier, that profit is the result of paying for everything that's already established. So if they're getting billions of dollars in profit, that means the minus of the revenue that came in and the costs have to be even more than that. It's not like they only paid a penny for all the workers, all the equipment and stuff, and they just raked in like $1 billion and a penny, and that became the profit. No. There's hundreds of billions of dollars in the infrastructure, in the workers, in all the regulations that they have to go through. And the other point I would like to make is that, another one they go with is, well, they're Scrooge McDuck. They just hoard all that profit. And the only thing I have to say to that is, well, if you're in a household right now, do you spend all of your money? If you don't, if you try to invest it in, let's say, retirement savings, I don't know, there's this trip coming up that you would really like, or, you're going to change jobs really soon and you want a little cushion for that time that you're unemployed. That's the same thing with any business or corporation. When they take a car factory, do they sell exactly every single car for the price that they want it? No. Thousands of things happen. People might not even like that style of car, for some reason. Doesn't strike their fancy. Recalls, all those things happen, and they have to make allowances for that so that they can keep the factories working, keep the people employed, and just keep the wheels of life and society turning.
Yeah, and so why you have the corporations with the corporate tax, why you have these big corporations that love corporate taxes so much, is that they do drive up the cost to do business so much that it's not feasible for folks like you and me to actually run a business and keep it going. It's like we have to start putting our own money into it, and we make nearly no profit just trying to compete with these guys, because at the end of the day, when that market crashes, nobody was able to set any money aside like Jake was talking about. There's no money set aside to survive that market crash. And then so you end up having all these bailouts. Like everybody hates these bailouts. I don't know of anybody that really likes them other than the people that are making bank on it. So that's essentially what a high corporate tax leads to, though, is you crush the little guys, and then the big guys take a hit too, and then they come to Congress hat in hand and say, hey, if we don't get this bailout, America's doomed. And so every few years, like we saw in 2008, you get these multi-billion, multi-trillion-dollar bailouts for these corporations, and meanwhile, services, your wealth gets centralized for one, and two, your services just get shittier and shittier because there's no competition. It's who lobbies the best at the end of the day. So that is eliminated with this tax plan. That's profound. I'm super excited to see that.
All right. I guess we can move on to the individual mandate.
Yes, let's do it.
Yeah, so in HR1, effective December 18th, 2018, the individual mandate will be gone. And, well, if the bill passes in its current form. But, a lot of people say that's the price you have to pay to be in the system. The whole Obamacare, it's kind of designed that everyone has to be thrown into the system, and if you're not, well, you're not paying your fair share. And for here, for simply not having insurance, which again can be something that can be dropped from becoming unemployed, swapping jobs again. I know a lot of places give you like a few weeks for the interim, but when that happens, these are the costs. $695 per adult, $347.50 per child under 18, with a maximum of $2,000, $2,085. And that's what you're charging people to stay in a mandatory system.
And so, like, basically, my big beef with this, and it kind of cracks me up how a lot of people on the left will bash this repeal, and they bash the repeal of Obamacare, or Affordable Health Care, Affordable Care Act. They bash it, but as we can see here, it's like it's forcing you to do business with the big insurance companies that lobbied to have this put into place to begin with. It's like these people are like hating on the big insurance companies, but at the same time fighting their fight for them against us, the ones that want to see these small companies rise up and topple these giants. You're forcing people into a market, for one, or else they pay a fine. And then for two, now, and they even use the excuse themselves, saying, oh, the only reason these big insurance companies are cranking up the price is because they can use the Affordable Care Act as a crutch and say, oh, well, it's the government's fault. And at the end of the day, it's like, okay, well, so at the end of the day, still you have this law that is giving the ability for these big insurance companies to come in and charge what they want because they set in all these regulations that crush out the little guys that could ever come in and offer alternatives. Like, that was the whole point of the Affordable Care Act, was to prevent any small businesses from coming in. It completely chokes them out so that the big insurance companies can charge whatever they want. And if you don't play ball, well, if you don't play your protection fee with the mafia, well, they come by and break some kneecaps and take some up to $2,085 from you.
Yeah, and that's also by the per person version. They've also got that percentage of income higher up, and you pay whichever one is higher for the penalty. So for the percentage of income, it's 2.5% of household income, with the maximum being the totally yearly premium for the national average price of the bronze plan. Or you do the per person route, and whichever one's higher, that's the one you get hit. Because, that's how it's a nice, fair system trying to help people get health care. It's when they get more of their money sucked from them. They don't meet the requirements.
And this is exactly why we've been seeing the wealth centralized. It's all being focused. I mean, you're talking about the increasing. It's crazy. We've had our great Lord and Savior Obama for the last 8 years saving us from the wealth inequality gap, and yet it's grown wider than ever before. And it doesn't happen through a voluntary system where people voluntarily decide to interact in the market in a certain way. You have it whenever you have mandates that force people to do things against their will, force them to shell out their money to people that do absolutely nothing with it, then line their own coffers. That's my interjection. Go ahead, sorry.
Yeah. I'll adjust your interjection a little bit. You can have wealth inequality, but in a voluntary system, you still got the system where you're making the pie bigger and not just trying to redistribute what's already there. So even though there might be a growing increase in wealth and income inequality, people from year to year will still be doing better. They'll still be getting more. And that's the main thing. It's not focused on what already exists, but allows people to plan for the future. Again, investing, trying to make more of what they've got and build upon it instead of just looking, well, things just don't look right now. Let's play musical chairs and see if we can't get something a little bit better.
Okay. And so for the third and final, Jake made a little graph here. Did a lot more homework than I did.
Yeah, so, the general claim of the good old middle class paying more than the upper class, or, just by the income tax scales. This doesn't factor in deductions. That takes a little bit more time, but this is just by the tax brackets, because I know some of them argue, well, the tax brackets change from 10, 15, 25, 28, 33, 35, and 39.6 to 10, 12, 22, 24, 32, 35, and 38.5. So they start, basically there's an overall reduction of everything that's at the minimum tax bracket, and somehow or another that puts more of the burden on the middle class than ever before. Well, one of the questions I was trying to answer, so I could even attempt to address that, is how do you even figure what the middle class is? How do you quantify that? And I found two ranges. I found one from the Pew Research, which covers yearly gross income of $42,000 to $125,000 for a household of 3. And then I found a more generic version from the Washington Post, which covers $35,000 to $122,500 a year. Now, I'm going to use the Post from now on because it is more general. It doesn't limit it to the household of 3. But one of the limitations with it is it doesn't count for inflation, and it doesn't count for cost of living. So even though their minimum range is that $35,000, like in my state of Alabama, you could probably be middle class with like $32,000 or $33,000 a year, things like that. But as you can see from this graph, the 2017, that's your current tax plan as it stands right here, is this blue. And the new tax plan is HR1, which is this red.
Okay.
And you'll notice this this gap right here. In fact, it starts somewhere down around that 12,000 mark, which is also, by the way, below middle class. And it just keeps going up. It gets its largest about around the 156,000 mark, which would be just outside of middle class and start being the lower upper class. And then from there, you see it starts gradually shrinking until there's almost no difference at the top. What that tells me is that no, the middle class isn't paying more through individual income taxes by the bracket rates alone. It tells me that they did a nice, moderate decrease starting from below middle class and going up so that they could get a break. And then once you get a little bit outside of middle class, they start upping the rate again so that it matches almost with previous rates.
Okay, and so just to give people a good idea of what this is going on here, is like this is basically the opposite of the bailouts we've been seeing. With the bailouts we've been seeing, it's I suppose closer to what people might imagine what trickle down economics is, if you believe such a thing exists. But trickle down economics is basically saying give money to these big time corporations that need help because they were overtaxed via corporate taxes, and let it trickle down to the little guys. with what we see here, this is to some extent, so to speak, a bailout, in that the money's going back to the people. Like, instead of these people having a third of their income taken from them, now they're having, say, 27% of their income taken from them. And that, between that and the decrease in the corporate tax, so not only are you going to have more money on your paycheck stubs that the government isn't stealing from you, you're also going to have more money, like the products you go to buy will be cheaper, and possibly better. So whenever you go to buy, like, you're going to just see a huge explosion in the economy with your buying power between these two things right here. But I mean, if you really look at this graph, though, I mean, it's crazy how the Democrats right now are making this out like it's apocalyptic. Like, before you showed me this graph, Jake just showed me this graph like 2 hours ago. And I was just thinking it was going to be some huge, catastrophic, like, just unbelievable shift. And if you look at it, I mean, it's just like, just a little bit. And that being said, though, Bernie Sanders did find the chink in the armor, if you will. Was he and his whole legal team went through there and found where the millionaires on the Virgin Island, there's a clause somewhere in that bill. There's these millionaires that will be getting several $100 million of their wealth back to rebuild all their estate that was destroyed during Hurricane Irma. You know, because I was just thinking the whole time, like, surely with awesome corporate tax cuts and income tax cuts, there's got to be some kind of drawback. It can't be that perfect. And sure enough, Bernie found the heavy price we're going to have to pay for increased consumer purchase power, and that's helping those millionaires rebuild their estates with their own money in the Virgin Islands. So,
how dare they?
I know, Jake, that clearly they've purchased the government. Apparently, Rand Paul did have a price for his soul. How much those millionaires paid him off, I don't know.
The profound moral outrage.
Yes. Okay, so let's get a look at those percentages. I wanted everybody to see that. Because, you know, a lot of people are looking at this and they're saying, I know our household isn't making $168,000, but damn, they're getting a huge cut. Like, that's actually about a 10% cut. That's pretty profound, actually. So I just wanted you for a moment switch over to the charts where it shows exactly how much the upper class is paying in regards to tax, the middle and upper classes.
Yeah. So, as it states, this was information from the IRS on 2015 based on 2013 data. And I've got a more up-to-date version of the income distribution here. But it says bottom 50%. That is, you know, $0 and yearly gross income up to $36,000, almost $37,000. So this is like the cusp of starting to enter the middle class right here. Is this area, and then the end of the middle class, as I said with the post, the 122,500, that is somewhere ending here. So this is where this solidly can be argued as the tax base for the middle class, around 26-27% right there. And then you've got definitely the upper class over here, and we're seeing around 58%.
So basically, if you look at the graph and the tax cuts they got, basically the more taxes they had to cut, available to cut, the more was cut. And if you look at the bottom 50%, there wasn't really much. If they cut any more taxes out of that, you're talking about damn near an elimination of the income tax. And, it reminds me of a meme I saw earlier where somebody was talking about, why is it that, I work a minimum wage job and I make 30,000 a year and I only got 700 back on my taxes, but then someone else making 600 grand got 3,000 back on their taxes or whatever, something to that effect. Don't quote me on those numbers, but the complaint was being made, and it's just, an income tax return is the money you get back for being taxed too much for your income. So naturally, somebody that's making six figures is probably going to get back more than someone making five figures. So again, this tax bill isn't like the evil wealthy are just extracting all the wealth from the poor. They're just getting to keep a little bit more of their money to maybe pay people in the middle class to, I don't know, put a new roof on their house or fix dents in their car or whatever. The stuff that gets the economy flowing, that keeps the middle class and lower class employed. Right. I think that's about all I got anyways, Jake, on this one. I think we nailed it. You got anything else you want to throw in there?
Let's see. Oh yeah, here's the more up-to-date income distribution here. This is actually broke down a little bit more in lines to the graph I set up. Not exactly the same numbers, but here again you can see right around here would be the start of the middle class right here. And it goes all the way up to this 14.1%. So there's roughly at least 51% of people based on income is considered the middle class right now. I know it's shrinking.
The shrinking middle class. I am the 12.3%, by the way. So I'm seeing a little bit of a cut, and I'm pretty excited about it. Probably going to buy a robotic mop or something with all my newfound wealth. Newfound and returned wealth.
Yeah, maybe you'll be able to afford like one more filter for your water filtration system or something.
Yeah, that's about how much it would cost.
And also a reminder back on this graph, around right here is where we saw the biggest discrepancy between the tax bases being dropped down. All the way down here, there's also a drop. And down here, there was less of a drop. So
yeah, good point.
This gets shaved off a little bit. This gets shaved off a little bit. But this one drops down more. This one, not so much. So on and so forth. So there's still the big Scrooge McDucks, the 1%, the 1/10 of 1% are still paying the majority in income taxes.
All right, well there you have it, folks. You got any final thoughts before I close this one out, Jake?
In case you think somehow we've duped you on any of this, or if you want us to cover anything else, as far as sources go, I got the HR1 document here from the Congress site. This is the Washington Post article. They mentioned the Pew Review research too. This is where I got what is the middle class and how they figure it. This is Statista.com. It's just a giant hub of very different statistical information. Tax Foundation. This gave me all the income data, tax data, corporate data, and stuff. You can check that out too. This came from Mercatus. I guess it's considered a conservative libertarian think tank. And this came from Business Insider for the corporate taxes. And this came from our beloved healthcare system itself. So if you think we made any mistakes, want us to cover anything else that we haven't, that could be featured here, there you go. There's our sources.
All right, so there you have it, folks, in a nutshell, the newest tax plan and what it actually means to you, not just some bumper sticker soundbite that the politicians have laid out in the troughs for you to lap up. So, anyways, with that being said, thank you for tapping into Critical Thoughts, breaking through the white noise to bring you the media that matters.